Good morning and welcome to another week. It's time for Business Morning on Channels Television. I'm Ini John Mekwa.
And I'm Ladi Williams. Thank you for joining us. Let's take a look at what's happening in the oil market. Oil prices rose this morning, recovering from a 7-day losing streak as investors hunted for bargains. And a softer dollar lent support, though persistent anxiety over surging cases of the Delta coronavirus variant kept sentiment cautious, combined with a firmer U.S. dollar to limit gains. Brent crude futures climbed 60 cents to $65.78 a barrel, while U.S. West Texas Intermediate crude futures for October rose 53 cents to $62.67 a barrel, recovering from a $61.74, the lowest since May 21st, touched in Asia's early trade. Both benchmarks marked the biggest week of losses in more than 9 months. Last week, Brent slid about 8%, WTI fell about 9%, as markets braced for weakened fuel demand worldwide due to the surge in the pandemic. Numerous nations worldwide are responding to the rising coronavirus infection rate triggered by the Delta variant by adding travel restrictions to curb the spread. China has imposed new restrictions with its zero-tolerance coronavirus policy, which is affecting shipping, global supply chains. The United States and China have also imposed flight capacity restrictions.
Now, on the 2nd of August, the Board of Governors of the International Monetary Fund approved a general allocation of special drawing rights equivalent to $650 billion to boost global liquidity. Just for clarity, the SDR is an international reserve asset created by IMF to supplement official reserves of its member countries. It is not currency, but a potential claim on the freely usable currencies of IMF members. As such, SDRs can provide a country with liquidity. A basket of currencies define the SDR: the US dollar, euro, the Chinese yuan, Japanese yen, and the British pound. And we hope one day the Nigeria's naira. So the SDR becomes effective today. Nigeria gets $3.35 billion. What will this do to the FX space and the economy in general? Well, we have Andrew Nevin, the chief economist at PwC Nigeria, to tell us. Good morning, Mr. Andrew. Good to have you on the show.
Good morning.
So
Nigeria, great to be here.
Yeah, so Nigeria gets $3.35 billion today, special drawing right. What impact should Nigerians expect from this?
Well, I mean, remember, when we say we get 3.35, we're not getting that in cash. It's like you've gone to the bank and the bank has given you an overdraft, and then you need to be wise about when you need your overdraft. So I'm not sure it has an immediate impact. I mean, it certainly helps the Nigerian federal government manage the economy and make sure that we're not going to have an FX crisis, so to speak. But I think we're in the same position we were last week, basically, which to us has been very simple. We've been very clear for 4 or 5 years at PwC. There's no debt crisis in Nigeria. I mean, our debt is very manageable if we grow the economy. So if we don't grow, we're going to have problems. If we grow, we're going to have problems. So when we grow at 1 or 2% a year, it puts tremendous pressure. But if we grew the way that we think the economy should grow, 6 to 8% a year, or as a central bank governor said, at 10% a year or double digits, we would not have any debt issue. We wouldn't even be having this conversation about $3.35 billion, which is not actually a lot of money in the scheme of the Nigerian economy.
Okay, but you did say that we don't have a debt crisis in Nigeria, and you know the debt stock of the country has been in the conversation in the business space for a while now. What do you mean by that? Because when we say that Nigeria is using about 98% of its revenue to service its debts, then people would not agree with you that we don't have a debt crisis in the country.
Well, what we have is a growth crisis. The way we put it is very simple. If we don't grow, we're going to have crisis. You can call it a debt crisis, an economic crisis. But we need to grow the economy. We need to grow headline GDP. The problem the country has is that we've been growing at 1 or 2%. And of course, we put forward a number of ways to address this. But the number one way that we have said consistently for the past few years and put out the big paper on was Nigeria has too many dead assets. And Nigeria is a very rich country. It has a lot of assets, but those assets are not producing a return. So one class of assets that's not producing a return is real estate. So we're not doing very well in the real estate sector. People aren't buying homes. They aren't able to get mortgages. Another class of assets that are dead are government assets. So if you look at Agio Foods of Steel or the refineries that cost us money that rather than produce a return. So what we've said is we need to unlock the dead assets. If we unlock the dead assets, the economy grows, we'll be fine, and no one will be talking about our debt because it's relatively low. If we don't unlock the assets, yes, then we are headed to an economic crisis. We cannot continue at 1 or 2% growth every year. I mean, people, of course, know we have high population growth, so what that's meant is per capita terms, we've got poor. We've got poor in 2015, 2016, 2017, 2018, 2019, 2020, 2021. And the question, of course, is, at what point is that a social crisis? And we may have the answer to that. So the reason we say all this is we don't want to focus on the debt, because the debt is not the primary issue. The primary issue is the economy is simply not growing fast enough.
Right. So what should the government prioritize, with this SDR coming in?
Well, I mean, we've also been very clear on this. There's really, one priority I've just mentioned, which is unlocking dead assets. So we unlock those assets, they're going to produce a return, we're going to have economic growth, we'll have growth in the real estate sector, we'll have growth in other sectors, and we'll have growth in tax revenue. So we won't have this issue where we're spending 98% of our tax revenue on debt service. But in terms of where the government should be directing resources, we've also been very clear. The two primary things are health and education. We should be investing in Nigeria's young people. I mean, the other part that we put into the equation, of course, is our biggest export is in oil. I mean, you opened the show talking about the oil price, but oil is really increasingly inconsequential to Nigeria. The biggest flow, of course, is the diaspora remittances. I mean, we are exporting Nigerian brains, and increasingly we're exporting Nigerian brains without them leaving Nigeria. And we've said that we should focus on. So let's invest in people, particularly Nigeria's young people. Health and education have to be at the top of the list. It has to make more sense to invest in Nigerian young people who, both from a human viewpoint, but also from an economic viewpoint, have much more potential than investing in Ajax Steel or investing in the refineries, where if they were valuable, we could get the private sector to invest their capital.
Wow, very, very fresh views there coming from Mr. Nevin. Thank you so much, Chief Economist at PwC Nigeria, for giving us fresh eyes into the issue, especially of the SDR, and of course the issue of where the government should prioritize at this time. Thank you so much, and enjoy the rest of your day.
Thank you so much.
So after the break, last week, the president of the Manufacturers Association of Nigeria, Mr. Mansour Ahmed, spoke about some challenges which man is facing. We'll discuss that and much more. That'll be after the break. Do stay with us. It's Business Morning on Channels Television.
Still watching Business Morning. Now to our next conversation. Last week, the president of the Manufacturers Association of Nigeria, Mr. Mansour Ahmed, had called on policymakers to be consistent to aid ease of doing business in the economy. He stated that the lack of consistency in the enactment of policies was making it difficult for manufacturers to keep their costs low and operate profitably. Well, we have the Director General of MAN, Mr. Segun Ajayi. He joins us now to elaborate on this. Great to have you on the program. Good morning.
Thank you for having me. Good morning.
Yeah. So the federal government has been talking about, ease of doing business for a while now. How impactful has this policy been on the economy?
Okay, once again, thank you for having me. The Ease of Doing Business program of the federal government came as a relief to economic actors. And that is indicating that those challenges that have hitherto limited one's capacity to profitably engage in private business were being dismantled. And as you know, on the international ranking, we have continued to improve. So the ease of doing business has to some extent solved the issues, especially about regulation, ease of registration, and so on and so forth. To that, there's positive impact. However, what we have always advocated, and which we are in constant engagement with the Ease of Doing Business Office, is that this has to go side by side with the reduction in the cost of doing business. If you find it easy to do business, but the cost of doing business is still high, you still have this barrier that will continue to limit the performance of business people. So yes, we are improving in the ease of doing business. It's now a lot easier for you to register your company. Payment of taxes are being made easier, and some regulatory bottlenecks are being put aside. However, the cost remains high. And once the cost remains high, it's difficult for you to profitably produce and be competitive.
Okay,
So I mean, that is just the basic argument around it.
when you said you need a reduction in the cost of doing business, I presume you're referring to things like infrastructure.
Yes, and even the cost of keeping up with regulatory agencies, the fees and the levies that they collect in the course of doing of performing their statutory functions. Those costs needs to be brought down, such that even though it is easy for you to get licensed or to get your licenses renewed, the cost of doing so is equally important. It has the capacity of affecting your bottom line, and even the time that you also spend in getting facilities to comply with such regulations becomes a drain on your process.
All right, so Mr. Ahmed also talked about multiplicity of taxes and levies. How has this affected you, and what's your suggestion, for the way forward?
It affects us negatively. Unfortunately, this is a bridge we thought we had crossed, but is coming back now, especially with the reduction in the revenue of government. Different tiers of government, the federal, the state, and the local governments, have continued to put levies on businesses, especially manufacturing entities, because as a manufacturer, you must have a factory which has a gate and is easily accessible. So all manner of demands come to you, both from the federal, from the state, and from the local government. What this does to us is that, one, it means that from the beginning of the year, it's not even possible for you to determine how much tax you are going to pay. And then anyone can show up at any time to ask for you to pay. And if you do not pay, they lock your gate. Even when our goods are on transit, you have local governments putting illegal roadblocks. Many tax forces are set up by states to collect levies and fees that hitherto were not in your production plan. They are not things that you are expecting. All this has a cumulative effect of increasing your business, wasting your time, and bringing uncertainty into the whole process. We had thought that with the publication of the list of taxes that are collectible by different tiers of government, this will have been brought to a close, but it's not so. And the Joint Tax Board has repeatedly assured that this was going to be done, but I think it's actually very proving difficult for them to rein in the activities of other tiers of government, particularly the states and the local governments.
Yeah, because I was going to ask that, are we sure some of these individuals who claim to be representing the government are actually not fake?
In some cases, I will agree with you, they are fake. But the thing is that they wear uniforms, they are not challenged by the police or government agencies, and so they operate freely. And if you argue with them, you will have your trucks delayed, and you know how the security situation in the country is. If you wait too long at any point, you are likely to also lose your goods. So I think while we agree, and we have reported several to the police, especially in Ogun State, there are issues there that we have reported to government. Once in a while they intervene, but it never stops them from reemerging. So the local government, through their association, have repeatedly also assured that they were going to rein in our members, and that once you pay a certain tax at the local government, it doesn't extend to the other. But all that has proved not to be true. And day by day, you have new ones being introduced. But what we have continued to advocate is that government should enforce its rules. If there are taxes and levies that have been assigned to each tier of government to collect. They shouldn't go outside of this, because we constantly inform our members about what those taxes are and what those levies are and when they are collected. And we have hoped that with this, there will be mutual obedience to what we have agreed. But that is proving to be difficult. In fact, in the recent CEO index that we conducted, the survey that we conducted, we saw that multiplicity of taxes and levy has continued to climb in terms of what has been a major challenge in recent times. So it's resurfacing again.
All right, so let's look at the foreign exchange. Now, there has been a change in, management of Forex by the CBN. Has this, made any difference in accessibility and availability for you?
Yes, I think we did welcome the change in the Forex management. And that was because we felt that with the streamlining of the process and it should leave more Forex in the hands of money deposit banks. And of course, manufacturers will now be able to meet their needs far better than it used to be, and at rates that will allow them to produce and be competitive. I would rather say that it's probably too early to say whether it is successful or not. I think in another week or two, we should be able to give figures as to what our members have demanded and what they have been able to get. However, from the reports I continue to have, we have not noticed any significant allocation to the manufacturing sector. What has happened is you will bid, you will have a specific amount that you have asked for, but there is never enough to meet your demands. However, like I said, we are putting together this information and we'll be approaching the central bank for us to be able to discuss on how we can benefit from this new arrangement. This new policy of government has brought it closer to what we have always advocated, which is that we should streamline and have a single window for allocation of forex, because it's easier for you to manage and to sectorally allocate to areas where you want to prioritize. So we are thinking that, yes, this is the right thing to do, but it must immediately continue to show that there is an appreciable allocation to sectors that you are prioritized. And I think the productive sector, the manufacturing sector is one of those.
All right, talking about manufacturers, this year is supposed to be the AFCFTA year, and you guys are supposed to be at the fore of it. I know that we do have a committee that is supposed to be in charge of implementation. How much conversation or communication do you have between you guys, the manufacturers, who are supposed to be at the fore, and, this implementation committee? And what level are we at now? Have we started?
Okay, yes, thank you. The AFCFTA, like you rightly said, is a very important agreement for Nigeria. Not only Nigeria and for Africa. It should be clear to everyone, including our trading partners from outside of Africa, that there is a decision now for us that has brought us together to agree to trade among ourselves, and then to be able to hedge against all those challenges we have had trading with other parts of the world. Yes, it started 1st of January this year, but it is not starting as smoothly as some would have expected, even though it didn't come to us as a surprise. There are so many areas that we needed to cover. And I must give kudos to the Secretariat in Accra, because between January and now, they have tried to speed up on those protocols that are yet to be concluded, especially the rule of origin, which is very critical to the implementation of the agreement. That is being sorted out, and Africa is gradually moving towards an effective start. So yes, we have started, but effective trading is still yet to start. And directly to your question in Nigeria, the National Action Committee on the AFCFTA is really, I think they are doing a good job. They are bringing together all the agencies that will be relevant to a beneficial engagement in that continental trade. However, we must notice that we need to have more cooperation among the agencies of government that are involved. We can still notice in some areas government agencies, ministries that are working at cross purposes. We have notified the National Action Committee on FCT, and something grand is being done about it. For the manufacturing work stream, that has been put squarely under the leadership of our organization, and you rightly pointed it out that we are supposed to be in the forefront. We are in the front of providing to government by way of information what they need to do so that Nigeria will be able to, so that manufacturers in Nigeria will be able to engage beneficially in this trade. We have also on our own part been talking to our members, which we do monthly, on what is required under AFCFTA, what they need to do to be able to identify the markets that they will penetrate. What are the regulatory and standard conditions that they needed to meet? We are also working together with other regulatory agencies, SON, NAFDAC, and the rest of them, so that we do not have non-tariff barriers that will debar us from having a good showing in the continent. So all those we are doing under the auspices of the AFCFTA Action Committee.
All right. Thank you so much, Mr. Ajayi Kadri, Mr. Segun Ajayi Kadri, Director General of Manufacturers Association of Nigeria, for sharing you're having this conversation with us this morning, and enjoy the rest of your day.
Thank you very much for having me. Thank you.
So we'll take a break now. When we come back, the issue of value-added tax and who are we to pay to? That will be our next conversation. Do stay with us. It's Business Morning on Channels Television. You're welcome back. The Federal Inland Revenue Service is asking taxpayers in the country to continue to pay their value-added tax to the FIRS in order to avoid facing penalties or failing to do so. FIRS issued the directive following numerous inquiries to the service in view of a recent judgment obtained by the Rivers State government at the Federal High Court, Port Harcourt, in Rivers State, which ruled that states and not the federal government are constitutionally empowered to collect VAT. However, the governor of Rivers State, Nyesom Wike, has signed into law a bill which authorizes the Rivers State government to henceforth collect value-added tax in the state. Now, what does this mean? What reaction can we expect from other states? We have partner, Africa tax leader at PwC, Mr. Taiwo Udili, to talk to us about this. Good to have you, Mr. Udili.
Good morning.
Good morning. Thank you for having me.
So first of all, we need to clarify, at this stage, because of the appeal from the FIRS, one of the conditions that they asked for was status quo remains. That means Nigerians are supposed to pay to the Federal Inland Revenue Service as of now, right?
Yeah, I'll say that it's not a straightforward question to address.
Okay.
Because lawyers would also tell you the fact that you file for a stay of execution in itself does not mean that you should stop the judgment from being enforced. So the good news, though, is that based on the VAT law, both the national, I'll call it national VAT law now, and the River State VAT law require that you only file and pay, file your returns and pay your VAT on the 21st day of the succeeding month. In other words, this law that was signed into law on the 19th of August in Rivers State, assuming it came into effect immediately, taxpayers and businesses would only have to pay the VAT by 21st of September. So that gives us, even from today, almost 30 days. That's enough time, in my view, for the taxpayers and businesses in Rivers State, using whatever platforms they have in terms of association, organized private sector groups, to go to court and ask the courts. I think the most competent authority to ask is the courts. Ask the courts, who should I pay to? Because if you go to FRS, from FRS, what do you think I will tell you?
Because the FRS just released this morning or last night to say that Nigerians should pay VAT to them.
Yeah. So, and it doesn't mean that they're wrong. But if you go to Rivers State, they'll say, pay to me. For the people on the ground there, the reality may be very different for them. So I'll advise that they ask the court to tell them what to do.
So legally, we don't know.
We don't know.
Now.
We don't know.
But we don't know only when it comes to Rivers State.
Yes.
Nationally, we're still where we were, which is VAT is to FRS.
And that is correct, 100%. In fact, this judgment is not the only one. We've seen a number of judgments at different points, even all the way to the Supreme Court. We've seen the ones that validated VAT and said you couldn't do consumption tax at the same time because VAT had covered the field of consumption tax, even Supreme Court. So it's not like this judgment is novel and is the first one, but nobody had taken the same effort and speed to try and implement as Rivers State.
As Rivers State.
The judgment was given on the 9th. By 19th, they had the law, 10 days.
Wow.
You know, that's a record. I'm sure
fast.
it's a record in Nigeria. You know, so but the question is, could we have done it differently? And my answer is yes. You know, you don't want to win a war and lose the battle.
Right.
Even if you're legally right, what does it mean for businesses? That if I'm looking for where to put my business in Nigeria now, I'll certainly not go to Rivers State because it creates the uncertainty for me. Do you need to engage more? Engage with even the other governors, your fellow governors, engage with NEC, with FRS, even with taxpayers and practitioners. Your tax authority, do you have a unit? Have you trained them? We've seen one of my clients got a demand notice from Rivers State for VAT, and I was laughing. You're not supposed to issue, there's no provision in that law that says you give a demand notice. The law says you do your own VAT, calculate output, input, and remit to the authority 21 of the following month. They're sending, but they sent it, I think they had prepared it before. They just sent the same day.
Perhaps it's at teething.
Yeah.
Teething stages.
But looking at, you know, collection, this is more responsibility for River States. How do they have the capacity for this?
Yeah, so I like that question, actually. So I think we need to break it down a little bit. Historically, VAT is one of the newest taxes in the world. So it only came into the scene around the 50s and 60s. First country to implement it is France. So in Nigeria, as of 1963, when we decided we'll be a federation, and I still read that constitution this morning, I wanted to see what was it that we thought about at the time. There was no VAT, there was no consumption tax, but there was trade taxes. Trade taxes, particularly focusing on taxes on commodities. And it was on the exclusive legislative list, which means only the federal government can legislate it. If you then fast forward, you get to 1993. Before then, in 1986, the military issued an order or a decree of 6 stars. 6 stars was being implemented by a few states. In 1993, Nigeria decided we needed a VAT law. And the VAT law was meant to replace the sales tax. And that's exactly what we did. You would know that the VAT law in Nigeria predates the 1999 Constitution, which means we're already collecting VAT when we wrote the 1999 Constitution. But the problem with the 1999 Constitution is it gave you the exclusive legislative list, says this is only for the federal government. It gave you the concurrent, it says both of you can legislate on it. Both lists are silent about VAT. But the way the lawyers have interpreted it is if something is not in the exclusive and it's not in the concurrent, it is in an invisible list called residual list. And that residual list is therefore the exclusive remit of the state. That's where we are now.
Of the state?
Of the state.
Okay.
But this is what it means in practical terms. As of last year, the FRS collected 1.53 trillion from VAT. About 51% of that amount, more than half, came from VAT on imports and VAT on non-import foreign services. In other words, even if you change the law today to say every state should start collecting their VAT, more than half of VAT will still be collected by the federal government because states won't go to the border, right? So this federal government is only sharing 15%, right? FCT alone last year collected 202 billion naira. And FCT and the local government only shared 35 billion. So even FCT donated more than 160 billion to the port. So it's not a conversation between state and federal. States and local government are sharing 85%. The conversation we should be having, and maybe to your question about do they have the capacity, I don't think so. And I say that based on my experience and what I've seen in the past 20 years or more. All over the world, the highest revenue yielding tax is personal income tax. All over the world. South Africa in 2019 collected about 12 trillion naira from personal income tax alone. South Africa, less than 1/3 of our population. How much did we collect in Nigeria? 844 billion, not even 1 trillion. This is a tax that states have been collecting for before I started secondary school. The same states are empowered to implement stamp duties. Until FRS picked it up about 3 years ago, not even 1 billion, all of them combined. They were not collecting it at all. Property taxes. So we have enough evidence to come to a conclusion that what is good for Nigeria today is to find a format of VAT that satisfies the concern of some of the states, like Rivers State, which is valid, which is that I'm generating more than the other person I know.
Right.
And this other person I know, including those who say certain items should not be sold in their territories,
and yet
they are sharing the VAT. So those concerns are valid. We can address those concerns within a framework that work for us as a country in the interest of everyone.
But there's also the concern from some of the examples you've noted, some of the taxes that states are even supposed to be collecting, and they're not even doing well. Shouldn't the state focus on that and look for ways of efficiently collecting those taxes, and perhaps they would not even, be so...
That one.
That's exactly the point. So the issue is, if you focus on effectiveness and efficiency of collection, we should not be talking about this at all. The only conversation we should be having now is, that percentage you're giving me, is it the right percentage? Not that you want to start collecting it. If you think about what it means for businesses, I buy something in Kano, and I'm selling it in Lagos or in Port Harcourt. Under a VAT system, you pay input VAT. I paid my input VAT in Kano. When I get to Port Harcourt, and I'm selling it and have output VAT, how do I offset? If I sell at a lower amount than I bought it, for VAT, you have a refund. Would Rivers State give me a refund of what I paid to Kano State? What if I'm producing those goods for exports? After exporting it, I'm supposed to get a refund because we zero rate it in Nigeria. Who will give me that refund? Many countries where they have fiscal federalism like us, Canada, US, Australia, India, everybody has developed their own formats of what is good for them. In Canada, for example, you have the GST, Goods and Services Tax, at the federal level, and every province is able to add their own to it, and they call it provincial sales tax. A province like Alberta decided that they don't want it, so it's zero for them. They only collect the federal one. Ontario decided they need additional 8%. The US is not a good example, though. They do sales tax in all the states. And in fact, one of the biggest conversations in the US is that sales tax is no longer fit for purpose because it hasn't considered the digital economy. So you're in California, but your other goods from New York. So the way the sales tax was designed in the US is where you are selling it, you charge the tax.
Yes.
But you're sending it to California where I'll use it. They are struggling with it, so we shouldn't copy from them.
Okay.
Yeah, but we must find a model that works for us.
So it's still a lot of work to be done.
Yes.
Even in Rivers State or in any other state.
And the Constitutional Review Amendment that we are going through now is a fantastic opportunity to address these issues.
To address that. And we do hope that the judiciary, the legislators will take this into consideration, and then we'll be able to satisfy all of that. Well, we need to thank you so much, Mr. Taiwo Udele, for spending this time with us and exposing to us that we still have a lot of conversations to hold to satisfy this issue.
Thank you for having me.
And we hope that this time around we're able to get to a conclusion because, there have been other cases even before now, talking about tax and even other countries. I think one of the conversations should also be like, things are changing, like the digital issue you brought up now. Things are changing. We need to change with times. And
some people are actually excited about this, saying this is true federalism. So
yes, some people say that, and that it will also challenge states to produce more inward because they know they will get more.
Yes, those are all valid. It's just a question of let's balance it so that you're not gaining one and losing two.
All right. Thank you so much, Mr. Taiwo Udele, Africa Tax Leader at PwC, and
Thank you
enjoy
very
the
much
rest
for
of your
having
day.
me.
Thank you.
So we'll head to the markets now. Will Ebong is here to give us updates from the market. Hello, Will.
Good morning, Nini. I'll just jump right into it. At the Forex market, the sports, forwards, and futures in the weekend at August 20th had a total turnover of $539.47 million, down by 22.11% from $692.6 million reported in the previous weeks. And this was driven by the declines in the FX spot and derivatives that we see on the chart there. In particular, at the investors and exporters window, total value was at $415.05 million, down 24.56%. Also at the NAFEX window, the Naira fell marginally by 0.01% to currently at 411.22, 411 Naira, 22 kobo to a dollar, pardon me. And similarly at the parallel market, we see that the Naira fell by 1.02% against the dollar to 515 Naira 80 kobo from 510 Naira 60 kobo to a dollar that was recorded in the previous week. Move over to the fixed income market, where at the fixed income market, the bonds market closed last week's trading on a bullish note. The average yield declined by 17 basis points to 11.4%. And across the benchmark curve, the average yield declined for the short, mid, and long-dated bonds due to high demand. And as expected at the bond auction last week, demand was higher, as well as a decline in stop rates across all tenors. Also, when compared to July's auction, the DMO offered instruments worth 250 billion naira, but eventually over-allotted instruments worth 260.09 billion naira. The lower yields is no surprise, as there are deliberate efforts by the DMO to reduce the domestic borrowing costs for the government. And move over to the treasury market, where we see that there was a bit of shortage in supply of securities, and it's continuing to linger in the market. And as such, sentiments were bullish as the average yield fell by 2 basis points to 4.7%. Also, the CBN is set to roll over 157.2 billion naira worth of maturities to the market participants at the bi-weekly PMA, which is this week. We flip over to the CBN special bills. We see that there was some little buy action there, but there was no action at the OMO market. And there's still the matter about CBN's continued absence from the OMO primary market. Also, we have inflows from the FARC disbursements and the IMF historic $650 billion SDR allocation, which takes effect today. And we'll wait and see what that will have, the impact that will have on the fixed income market. Now, let's check out the stock market, which was not immune to the pullback in global equities, as losses recorded on the last trading day eroded the cumulative gain that we saw. The all-share index fell by 0.1%, and this was driven by sell-offs in Nestle Nigeria, the weekly loss resulting in the 0.1% that I have mentioned there. And the all-share index stood at 39,483.08 points. Consequently, we see that the month-to-date and the year-to-date losses have settled at 2.4% and 2% respectively. Activity levels were quite weak compared to the previous week, as the trading volumes and value declined significantly week on week by 2.4 and 45.9% each. Sectoral performance was broadly negative as well. We see that all 4 key indexes were down, except for the industrial goods sector, which was driven, which the uptick we see there by 1.85% was driven by Lafarge. We boosted that sector there. To talk more about the activities there, what happened in the equities market, we'll have Charles Fakroha, Chief Operating Officer at Supra Commercial Trust Limited. Good morning, Charles.
Good morning. Thank you for having me.
Great to have you too. Charles, last Friday, the global shares were on course for the biggest weekly drop since February, and the MSCI World Index, a broad gauge of global shares, fell by as much as 0.7% on Friday due to rising coronavirus cases. And our local equities market was not left out. How can the markets, in your opinion, protect the interest of investors going forward?
Yes, you know that the Nigerian market is also part of the global community. And like you have said, the COVID-19 issues currently we are facing is having some impact on the market and economic activities. And Of course, what we saw on Friday, 0.47 down, we are seeing from the sell-offs like Nestle and all that. So for investors who always advise that they should do a proper research for themselves, a little homework, and know the type of the sector they want to invest, that once they are seeing it up and down, their portfolio will still be rebalanced. So for investors in Nigeria, they should just remain focused and at the same time get close to their stockbroker who understand their risk appetite and begin to advise them on where to invest.
Thank you so much for that market advice there. I'm sure that our audience are very happy to know that they can stick to their stockbrokers and get financial advice from them. So, Ini, that's what we have for the market today. And hopefully this week will be a green week, not a red one.
Hopefully we'll reduce some of those losses this week. We look forward to that. Thank you so much, Will. But we'll take a break now. When we come back, we'll do an opening call to London. Do stay with us. You're welcome back. Well, we head to London, where we are happy to have Juliana back. Juliana, good to have you back. I hope you had a restful vacation.
Not really restful, Inni, but I'm so happy to be back. I missed my family back home. Nice to see you guys.
Great to see you too. Well, you came back to see the labor crisis that seems to be worsening as the Association of Independent Meat Suppliers is asking to be allowed to work with prisoners. Paint a picture for us. What's the situation?
Yeah, goodness me, 1 week away. It's like 10 years in the business world. And we had data from the Office for National Statistics showing that in the month of July, a record 1 million vacancies have been left unfulfilled. There are lots of issues concerning this. Mostly it's due to the fact that there are so many Europeans that went home last year and struggled to get back. Some of that was because of the pandemic. Some of it was because of Brexit. And there is now a shortfall. So they are asking, certain sectors are asking the British government, particularly the Ministry of Justice, to provide prisoners to help with the supply. Now, this is a good thing, especially in this country. There are several schemes that are currently running to allow low-level criminals, so people that haven't committed the most serious of crimes, to go out on day release to earn some money and help fulfill some of the shortages. So that's what's going to be happening. The only thing is, this has been going on already for about 9 months. So even though I think particularly when it comes to meat manufacturing and producing, meat producing, they really need the staff, but they just don't exist. There are only so many prisoners that can do this. So it is a big topic, and we're waiting to hear how the Ministry of Justice will expand this.
Yeah, we'll certainly follow up on that story. And the end of the month of August is upon us. Almost time to sign a free trade deal with New Zealand. What are the details of this deal?
Well, yeah, all we know so far is that it's very promising, and perhaps in the next couple of weeks, Liz Truss, the International Trade Secretary that's been dotting all across the world, trying to get as many tariff-free trade deals signed to kind of combat what happened, the void that was left after Britain left the European Union. And New Zealand is the next one on the list. I believe last year, trade between the two Commonwealth nations was about £2.3 billion. British fashion does exceptionally well here, there in New Zealand. I think last year it was worth about £30 million. And if this free trade deal is done, then the 10% tariff will be reduced. For lovers of Sauvignon Blanc or Pinot Noir, which are very popular New Zealand wines, if the trade deal is signed, then perhaps you would be able to get a bottle of wine for 20p cheaper, as well as luxurious honeys and apples. So it's a good sign. Obviously, it doesn't replace the billions that is traded with the EU, but the more that Liz Truss can get ticked off, the better.
All right, and it's Monday, so what date are we looking at for the week?
It is Monday, a long way off from Friday, Inni. But we've got PMI data. PMI data, in fact, it probably is in now, so I'll be able to update the team with that at Biz Inc. at 1:30. But then again, got GDP. GDP data is due in on Friday. This is going to give us the first indication of what the third quarter is looking like. In June, I believe GDP grew 1%. So we're currently about 2% below what we were pre-pandemic levels. So we're finally filling the gap. But all of the PMI data we have looked at over the past couple of months does show that third quarter GDP may not be as strong as the second quarter, and it's very, very important. So we'll be keeping our eyes and ears out for that, Inni, on Friday.
Yeah, but at least for today, we'll look out for the PMI at 1:30. Thank you so much, Juliana, and good to have you back.
Yeah. Thank you. Thanks, Inni.
So Bitcoin seems to be back on the winning streak. Is this the one that will lead us to the $100,000? I don't know, Juliana.
Yeah, Bitcoin back over $50,000 for the first time since May. And obviously, the bulls are looking towards that 100K level. We'll be watching how that happens. It's a green Monday. Bitcoin over $50,000. Ethereum over $3,000, and a couple of altcoins, especially Cardano, doing so well. Cardano almost hitting that $3 mark. It's crazy how Cardano was at 4 cents for the longest time last year, but now trading close to $3. Incredible run there. Market cap above $2 trillion, 2.16, up 2.99%. 24-hour volume traded this morning, $105.24 billion. Up about 2.14%. Bitcoin dominance, 43.87%. Price of Bitcoin at 8 a.m., 50,305, about 2.33%. 24-hour volume traded in Bitcoin this morning, $30.13 billion. And we had that 1 week chart there. The MACD has crossed, and we see the histogram forming there in a bullish territory. And see, it's crossed the simple moving average. There's a lot of volume coming up there. MACD cross. Bitcoin is looking good on this weekly chart. Ethereum, $3,332, up 2.98%. 24-hour volume, $19.37 billion traded in Ethereum this morning. Top odds by market cap, we have BNB doing well, up 6%. And Cardano, biggest gainer there, $2.80, almost hitting that $3 mark. Dogecoin, not doing so well this morning. It's down about 0.11%. And XRP still above $1, looking good this morning. Cardano is on fire, almost hitting that $3 mark. Everyone is talking about a Cardano in the crypto space right now. And top five gainers, we see TEL leading that counter up about 25%. Let's bring in Olumide Additional now, a financial market analyst. Hello, Olumide. Good morning.
Hello, Ladi. Happy Monday.
Happy Monday, Olumide. So let's compare this bull market now. 2021 compared to 2017. The ICOs led the 2017 bull market. Now we have NFTs, play to earn, and a lot happening. A lot of big companies putting Bitcoin in their spreadsheet. Tell us now, what is the similarity to the previous bull run, and what can we use to know when to take profit in this bull market?
Okay, thanks, Ladi. Very exciting to be on the show. First of all, I think listeners need to understand that the market is rallying based on some key metrics we are seeing of late. And if you can recollect, global banks for the first time are investing deep into the crypto industry. And data from block data, for example, revealed that billions of dollars thrown by banks like Standard Chartered, Citibank, UBS, BNP Paribas, Morgan Stanley, JP Morgan. These are banks that have $1 trillion assets. So they are seeing institutional inflow coming in after the dip happened. And that's really very striking, because you need to recollect that we were concerned about the regulatory concern about some asset classes being tagged as security. But I think Bitcoin happens to be the king here, because if you look at how recent survey from Deloitte shows that most institutional investors will rather pick Bitcoin. And the difference between that and 2017 was that we didn't see those kind of presence. We didn't see the likes of Goldman Sachs, JP Morgan having credence in the crypto market. Another difference you need to understand is that we're having a lot of diamond hands right now. 70% of data shows by Glassnode shows that 70% of long-term investors have not moved at all. They didn't blink, and that is increasing. So it means that the price volatility we are seeing is done by some institutional investors taking profits and many retail investors getting bought. So I think for now, if you look at the market, Bitcoin seems to be decoupled, apart from Cardano, which had a recent, which is ongoing a recent upgrade that will make it more efficient. And Cardano has been gaining a lot of interest, especially in emerging economies. So they see it as a rival to Ethereum, the fact that it has more efficient parameters around it. So that's interesting to investors. And the price differential shows that it's cheaper for retail investors to hold on that asset. So we've seen that the crypto market in just 30 days have gained about $1 trillion. And that is telling you that the market is just starting. And it shocked me because my estimate for Bitcoin this year was between 30 to 35. But I had to raise the forecast because institutional investors are becoming stronger in this space. And just today, PayPal announced that we're going to be launching crypto service in the second largest economy in Europe, and that's the United Kingdom. So it's just telling you that crypto is becoming mainstream, Radhi.
Oh, yes. Quite bullish. Anyway, quickly now, where do you see Cardano topping out at? What price?
Wow. Cardano is moving close to figures, just like you said. But, the truth is that the difference between the rally we are seeing in this quarter and the rally we are seeing in Q1 is that the institutional investors are largely responsible. So I think at one point the market. So for buyers, I think they should watch out for 2.5. Those that are holding should try and take profits before it breaks below 2.5. But if it breaks above $3, then I think we're looking at $3.5.
Okay. All right, Lumide. Thank you so much. Always great to talk to you.
Thank you, Radhi. Yeah.
All right, there you have it. It's a bullish market we're in right now.
Yeah, but you know what Olumide said about, those who are holding it should take profit now.
Always remember to take profit, because this market knows how to take back profit.
Take back your capital.
Oh, yes. It might even take back what you invested, so you need to be very careful.
Anyway, so that's it on the program. Thank you so much for watching. I'm Ini John Mekwadu. Remember, at 1:30, Business Incorporated will come with updates from the world of business.
And I'm Ladi Williams. Thank you for watching.